Welcome to the Lone Ranger Radio Show. My name is Bruce Woodburn. I am the Lone Ranger. If you have any questions for me that pertain to real estate, getting a mortgage, refinancing your home, any of the above, you've had an issue with trying to get a mortgage, maybe you've had you're struggling in this market because it's a crazy market. Let's just be honest. There are way more buyers than there are sellers, and it can be a little frustrating for some folks out there. We're going to talk a little bit about how you can become the winning offer when you're negotiating a transaction, how you can make yourself in a position where you're better than the other buyers and you stand out. There are techniques that you can use. The problem is that your banks and your credit unions and your national mortgage companies don't offer these services. We're also going to talk to you about which type of loan appears to be the best in terms of a seller choosing which buyer to choose from. So we got a seller. They're entertaining, let's just say 3 offers, even though there's probably 10. Let's just say one of them is a conventional loan with 10% down. One is a conventional loan with 20% down. Let's do 4 buyers. One's an FHA loan with 3.5% down, and one's a VA loan with no money down. Which one do you choose? Well, most people think they're going to choose the conventional loan first, and they're going to go with the 20% down versus the 10%. Why? Because they think that that's a stronger buyer. They have more money into the transaction. Well, let's just break that down, folks. By the way, if you have any questions for the Lone Ranger, I've been in the business for 32 years. I've closed well over 9,000 transactions. I take calls personally. I help clients through the transaction personally. And I'm committed to making sure you get a great mortgage at a great rate under great terms, and we close smoothly and on time. That's my commitment to you. You want a great mortgage company, you choose me. I'm telling you right now, here's what you don't get with another company. You don't get me to make sure that the transaction closes on time. And when you get me, you get my whole team of loan officers. You don't just get me. You get me and a whole team of loan officers, not some person sitting behind their desk, maybe working out of their garage in Hoboken. You don't even know where these companies are from. They've got loan officers that they hire and they work out of their basement. Who knows? Anyway, I close transactions on time. So let's talk about these transactions. We've got a 20% conventional, 10% conventional, FHA 3.5% down, and a VA at no money down. All right. Which one's better? I have no idea. You know why I have no idea? Nobody has any idea until you find out how qualified the buyer is. Because just because somebody's putting 20% down, they may have more money to put in the transaction, but they may have all kinds of issues. Maybe they're hiding that they have another house to sell. Maybe they're getting a gift from family members and it's not documented. Maybe they have whatever. Could be any number of reasons. I don't think conventional loans, even though they're great, don't get me wrong, I don't think one loan is better than the other. The best loan is the one that fits the client's needs the best, because one loan isn't better than the other. It's if you got a high credit score and you got 20% down and your ratios are low, debt ratios, then I'm probably going to take you in the direction of a conventional loan. There's no PMI. But if you have a 620 credit score and you want to put 3.5% down, it doesn't mean that you're a less qualified buyer. If you're a veteran and you're putting no money down, it doesn't mean that you're a less qualified buyer. It doesn't mean any of that. Here's what it means. The client that's the best qualified is the one that was vetted, that truly has all their information, that truly is fully approved for their loan. And here's the thing. I'm going to be honest with you guys. I think most loan officers, whether they work for a bank or a mortgage company, are a little overzealous, and they're not truly dotting their I's and crossing their T's when it comes to getting pre-approved for your financing or approved for your financing. They don't ask enough questions up front. They don't get enough documentation up front. Hey, banks are really scrutinizing transactions right now, as they should. They're loaning money. We don't want to go into the same issues we did in the mid 2000s. That was a disaster. It killed all of us. It put the planet in bankruptcy. It was terrible. We don't do that anymore. There is reasonable and responsible underwriting right now. So which loan is better? the person that qualifies the most, not the person with the most money down. So when we break this down, what type of loan has the most strict guidelines of any loan? Can you guess? Conventional. That's right. Fannie Mae, Freddie Mac, conventional loans are the most strict. They have the most strict debt ratio, can't go over 45, unless you're putting a lot of money down and have unbelievable credit scores. You might be able to push that to 50, no more than 50. Okay, very tight on guidelines, very strict on income, very strict on where the cash to close is coming from. You need more reserves, meaning that if you have another property, you have to have reserves on every property, 6 times the payment for every other property that you own. So you have to have a lot more reserves. It's a more strict guideline for conventional. Now let's look at FHA. FHA, most flexible. Shoot, I don't even have credit score requirements on FHA. If I can get you approved, you're approved. I mean, I closed a loan with a 561. My son, Chase, closed a loan, I think 511 last month. Client was putting 20% down, but nobody would touch the client. We got him approved and we got him closed. We got a 561 closed, 581. A lot of these lenders and banks won't touch you if you're under 640. Oh, and by the way, whatever credit score you pull up online is always about 35 points higher than a mortgage score. Don't freak out when you call and you go, oh my God, my score dropped. No, it didn't drop. A mortgage score is always about 35 points lower. All right, now we got VA, okay? VA loans. By the way, if you're a veteran, stop the car, pick up the phone, call me for purchases or refinances. I have been doing VA loans and helping veterans for 30 years. I will help you. 407-706-3313. 407-706-3313. Or apply online at webringyouhome.com. That's webringyouhome.com. I'll help you as a veteran. I love helping veterans. Now, VA loans also pretty flexible. I mean, I've done loans up to a 60 back-end debt ratio for a veteran. 60%. There's no other loan that'll go that high. And you can put no money down. And credit scores are relatively flexible, much more flexible than conventional. Not as flexible as FHA, but flexible nonetheless. So a lot of great opportunity there. So which one do we choose? Conventional 10%, conventional 20%, FHA 3.5% down, or VA 100% financing. Here's what I choose. I always put my veterans first. If they don't qualify, and you can vet them, and if there's some reason they don't qualify, move on to the next buyer. But why wouldn't we give our men and women that put their life on the line so that you could go out and buy a house, sell a house, refinance a house, have a job, drive a car, buy a car, exist in this wonderful country, regardless of some of the garbage we're dealing with right now, because of our men and women that put their life on the line for our country. That's what we want to do. So always give the veteran the benefit of the doubt. When the only reason not to choose a VA loan is if your property has a lot of deferred maintenance, wood rot, rotten roof, maybe not completely up to par, you're way overpriced. That's the only reason a veteran might be at a disadvantage there. But otherwise, choose the veteran. That's what I would do. I'm committed to my men and women, and I'll put my money where my mouth is too. By the way, if you're a veteran, you want to get a mortgage, don't go to your USAA, go to the loan arranger. He'll take better care of you. I promise you that. You'll get phone calls returned. You'll get my entire team. I'll help you get the transaction. 407-706-3313 for the loan arranger. 407-706-3313. We'll be back in 5 minutes with more of the Loan Arranger radio show and Cleve Loveland. 407-706-3313, or we bring you home.